Ladies and gentlemen, at our monthly forecast meeting, we reviewed economic data releases and events of the last 4 weeks and checked whether our forecasts were still correct. We have discussed the consequences of protectionism for a long time. While the long-term consequences for growth are clearly negative, there could even be positive effects in the short term, for example if US companies have to invest more in order to shift production back from abroad. In any case, the US economy has surprised us positively until recently, and we are slightly raising our US growth forecasts. But the upward revision is not strong enough to change the outlook for Fed key rates. We also expect the Fed to raise its key interest rates again in both September and December. Next year, however, the neutral key interest rate level will slowly come into sight. The discussion about an end of the rate hike process will begin. This is why we see a weaker dollar in 2019. Unlike in the US, growth in China should continue to slow down. This is also due to the fact that the government wants to reduce the very high level of corporate debt, particularly with state-owned companies. The trade conflict with the USA is likely to be an additional burdening factor, whereby more capital controls should prevent further significant weakness of the yuan exchange rate. In the Eurozone, leading indicators have recently stabilized after falling significantly in the first quarter. Economic growth is unlikely to slow down further. This is in line with the fact that wages have recently risen somewhat more strongly. The core inflation rate should increase slightly in the coming year. However, we do not expect a classical rate hike cycle, even if the ECB raises its deposit rate from -0.4 to -0.3% in autumn 2019. Thank you very much for your attention.